the National Association of Realtors said, hey, we're in a housing recession. Lack of activity due to lack of inventory, but also interest rates. It's Larry Gonzales with your Mortgage Market Minute. What's going on in our housing market? Before I go any further, please like, comment, subscribe. Prices are down. That's right. Inventory's up. Those two things alone are very good for buyers. What is not good for buyers, rates. Rates are up. That's making it a little more difficult right now for buyers. Let's get into a couple of reports that came out this week. So last week we had the existing home sales report, and it was a stinker. This was for the month of July. The National Association of Realtors chief economist Lawrence Yun said, hey, we're in a housing recession because lack of activity due to lack of inventory, but also interest rates. That was last week. And then this week we got a new home sales report at the beginning of the week, and that was down. That was down pretty good. Over 12.5% decrease month over month. The 30% decrease year over year in new home sales. And this is kind of piggybacking off of a report from last week from the National Association of Home Builders, where they said, you know what, we're not building many homes now because it's too expensive and we're losing money. So you take all this into consideration, that's pretty bad stuff. So new home sales down 30% year over year, and despite this decrease in housing sales, pricing still remains strong. The median home sales price for homes is up 8% year over year. So we're looking at 8% to 12% appreciation year over year. So prices are strong. They're coming down, but they're still strong. The bottom hasn't fallen out. And then we got the pending home sales report. Actually, it came in better than expected. The expectation was that pending home sales would be down 4% month over month. It was only down 1%. That's actually good news. Again, good news is it wasn't really bad news. Okay, so they're down 20% year over year with pending home sales, but this is the 8 months out of the last 9 where we've had a decrease in pending home sales. So basically, July sucks for the housing market. Okay, but the National Association of Realtors chief economist Lawrence Yun says, you know what? I think we're near the bottom. We'll see. You know, a lot of it has to do, quite frankly, with where interest rates are. In June, rates hit the highest they've been in years. All right, since like 2018. And then in July, rates came back down. Man, I had a lot of people who were looking to buy a home in July, and I have a lot of people who went into contract in July. But now we're kind of getting up. The rates have gone up, not as high as they were in June, but they're going up right now. And they've actually gone up over the last really 5 days, kind of going back to what I've been talking about. And that is not a lot of news. So people are kind of freaking out about other news that isn't necessarily related to our inflation, but you know what? It's just news, and it's a good reason for people to have doom and gloom. I am not a doom and gloom guy, but when Europe, UK, they reported last week 10% inflation. First time they hit double digits, I think, in 8 years. And then Germany, I want to say they had like 60% inflation. How the hell do you have 60% inflation? I don't know, but pretty high. Those two reports alone just absolutely knocked our rates. It had a really bad impact on our interest rates coming at the end of the week, and it just kind of has fed through the beginning of this week. What we are waiting on now is some good news. We need some good news. Get that on Friday. This Friday, we're going to get the PCE, the Personal Consumption Expenditure Report. This is the Fed's favorite measure of inflation. And if it is flat, I'll tell you what, we will rejoice, and I think rates will come down. If it's lower than expected, then we're going to rejoice even more, and I think rates will come down even more. Here's another thing that we need to talk about. What is the Fed going to do? Because the Fed, right now, we're kind of in a housing recession. All right, we got inflation. Inflation's been up. Okay, rates are going up. And you got a job market that is very strong. The Fed is going to have to take action. Minneapolis Fed President Kashkari just came out and basically was super duper hawkish and said, we are going to keep raising the Fed funds rate. We have to get inflation under control. So bottom line, all right, the Fed is going to have to continue to raise the Fed funds rate, even with a good report on Friday, and we still have 2 more reports coming up in September. They're still going to have to raise the Fed funds rate. Is it 50 basis points? Is it 75? Is it 100? We don't know yet. I think we'll have a better answer once we get the September reports. But right now, we need something to stop the mortgage interest rates from going up. What is it like to be a home buyer right now? It's not like people don't want to buy homes. All right, it's kind of like when you're in school and you have recess and you want to go out and play, but it's raining outside and your teacher won't let you go out and play. Our rain those interest rates. I will say this though, sellers are giving credits, and that is making a big difference. I've seen $10,000, $15,000, $20,000 seller credits that are helping people actually get rates and make their homes more affordable. All right, at some point, interest rates will come back down. What is a happy medium? Before 2019, we were in the mid to high 3s, mid to low to mid 4s. It was a good spot we were in. Inflation was low. I think that's probably where we'll end up being, but I don't know when we're going to happen. One of the things that I've been doing with my clients is showing them, hey, here's where you're at right now at today's rate. Okay, but this first rate is not your last rate. You are going to have an opportunity to refinance. A bit of news that came out yesterday, and that is we're talking about inflation, and man, our government's been spending money left and right, money for this, money for that. And yesterday, President Biden signed the Biden-Harris Student Debt Relief Plan. They're gonna forgive $10,000 to $20,000 of student loans to anybody making less than $125,000 a year. I got issues with that, not just because that's $300 billion that's gonna have to be paid from the top 5%, whatever, it's gonna be paid by all of us. How is that helping us with inflation? I am proud to be an American, absolutely 100%. I'm just not proud of what we're doing right now. We are not, it's only 10,000, it's only 20,000. Man, but it's 10,000 here, it's 10,000 there, man, it all adds up. And we're gonna implode under our debt. We're gonna implode under our debt if we keep doing this. And that's a shame, all right, because we're better than that. That's all I got here. Peace out, brother.